Hey everybody, and welcome back to another video. This is How to Invest, Spencer here, and this one's going to be a new video on a stock that just changed their name. So they were formerly known as Square, but they changed their name to Block as a reference to the blockchain technology of cryptocurrencies, which is kind of going to be their focus for their company in the future. Their ticker did not change, it is still SQ, so it doesn't really make any sense anymore. But if we get straight into the video, I wanted to make this just as kind of an opinion video on what I think this stock is a buy, sell, or hold at this point in time. If we look at the quick chart, it has been on the move of recent and has been very, very volatile for the year to date and has been very range bound, but has broken the range very recently. If we look at the market cap, as we look at first, for the first stat, as we always do on the channel, it is $80 billion, and the price per share is $175. If we want to look at some of the stats, we can see here that the trailing price to earnings ratio is very high. Typically for the S&P 500, an average company is a 20 to 25, and this is 164, almost 10 times that, so 7 to 8 times the average of the S&P 500. This is a very fast growing company, but I don't think they're 7 to 8 times faster than the average company on the S&P 500. If we look at the forward price to earnings ratio, they are 84, which is a little bit better, just about 4 times the average, and about half as bad the trailing price to earnings. So some of the stats that I wanted to touch on. First, we will skip the profitability because I wanted to talk about that last, and I actually have an article here on their profitability. The first thing is the income statement. So this is for the first 3 quarters of this year. So they've made just under $17 billion, which is actually quite lucrative for, I mean, they're not very early stage growth company, but they haven't been around for too long, and they're only worth $80 billion. This is a 26% increase year over year, which is phenomenal. I always state at any time you're over double-digit growth for a company, especially a company that's this big, is just very, very bullish. But the one thing that is negative on their income statement is that their earnings year over year was down 100%. I think most of this is due to fluctuations in cryptocurrencies. Obviously, last year we saw a huge increase in cryptocurrency prices. And not to say that they haven't increased this year, but last year definitely outshined just the rate at which they increased. They almost 10x last year, going from 6,000 from Bitcoin all the way up to 60, and we just haven't seen that substantial move this year. So I think that is a good amount of their earnings lost there. So their balance sheet is also a bit to be desired. They do have quite a bit of debt, and they're not able to pay all of it off. They have $5.3 billion in cash and just about $6 billion in debt. But some may argue that this could be a bullish point because I was saying earlier, interest rates are at almost zero and have been for quite a while. And a lot of companies did take advantage of this because most companies are opportunistic and think, well, I mean, if there's free money, we might as well invest in our company and try and really expand it to be everything that we thought it could ever be. I mean, it's okay. Definitely could be worse, but definitely could be better. If we look at the share stats, this company is very, very coveted by institutions at almost 80% held. Most of the insiders have already sold off just because of the substantial move that it's made since the IPO a couple years ago. And the short percentage is also quite high, just because this company isn't always the most, isn't always the most sustainable on the stock chart. Typically, when you want a stock in my personal opinion, you would want it straight up and to the right on a diagonal slope like this so that you can keep steadily buying in. And this is what really great companies tend to do. I'm not saying that this isn't and can't over the long term, but if you look at Apple's stock chart, over the past 40 years since it IPO'd, it is straight up and to the right. And almost any point is a good time to buy in. And if you hold for long enough, you will make a substantial amount of money. Now, this stock is very different. It gets very parabolic and will go straight up at points. It has long periods of consolidation and range boundness, like I showed on the chart, and is also going straight down currently. So that is why, typically why shorts tend to get in stocks, because they get overvalued and they just get too hot too quickly. And it's kind of like pumping the brakes. So they're not always a bad thing and can honestly create very good buying opportunities if they win for long enough. So this stock wasn't going away from the indices either today. Obviously, the indices were very red. So that has something to do with it too. If the indices are selling off, then they're going to be selling this stock as well. But to finish off on the stats, I wanted to say that their profit margins and their profitability is very low for the amount of money that they're making. And this is a bit worrying. And I do have an article to reference some of their issues with this. But less than 5% is just very small for any company, in my opinion. So this is a bit of an older article, but I think it's still relevant and did reference the future. So let's read over it very quickly. So Square, obviously they changed their name now to Block, disappoints investors with its margins next year. The stock is still worth an overweight rating. So if we look what the stock price was when he wrote this, we can see, scroll down, where does he say the stock price? I'm not sure, but I know at this point in time the stock was around $50 a share. So he was obviously very right when he said that this stock was overweight and margins weren't a concern at that point in time. But this was also a very good point in time to be buying stocks. Tesla, if you go back during this period, was starting to take off. And was just a very good buying opportunity for most stocks. That is up until March of 2020, when most of them crashed and then had even better buying opportunities. But I just thought it was interesting that they thought this stock was a good buying opportunity, even though their margins were very... Sorry, I had to get a drink of water there. Sentiment may languish in the near term, Beck writes, as the company invests money into its businesses. Some of that cash will be from its sale of caviar to DoorDash, and some will come from funds generated from its core businesses, which means that its company's margins will likely hold flat rather than expanding by a few percentage points. This sort of investment may keep the stock from rising much in the near term. They were wrong, but it's worth noting that Square can improve its gross payment and volumes and monetize Cash App by doing so. Cash App lets users do peer-to-peer transfers, as I was saying earlier, mostly over their phones from bank to bank. Currently, most of its features are free, but when customers use the debit card or instantly deposit their money, they do make money currently and are looking to expand upon ways to make money from the app. Looking ahead, Square's prospects have divided Wall Street's analysts. Wedbush, Moshe Katri makes essentially some of the diagnosis of the company's current situation as Beck, but comes out with a more negative view. Obviously, they were wrong at that point in time. If the stock price was around 50, it went up to almost 300. It is now about 175. But we are looking at today. So today, the margins are still horrible. They're still very low. And this is my issue with the stock price, because as long as their margins continue to stay low, inflation hurts them more and more, because as stocks continue to keep their same prices, they're losing money as inflation increases. So if you aren't able to pass on some of the input cost of your operating margins for a company onto your customers, then you're going to continue to lose money and lose opportunity cost, where you could be making more money and investing it into your company. So that's a big issue that I have with this company. It's something that me personally, I wouldn't be able to turn a blind eye for it, just because this has been an issue for much longer than 2 years. There's articles dating back to 2016 stating that their profit margins are very, very low, and don't worry that they'll continue to increase. And this is Motley Fool and Seeking Alpha, and yet they haven't, which concerns me quite a bit. So for that reason, I won't be investing in this company anytime soon. Maybe if it gets to under 150 or around there, I will have to take a harder look, just because I have been wanting to expose myself to more fintech. But you can see here, this was 2016, and this article is just all about how their margins are low, more margin, high margin products, and they're looking to increase it over the years, but they really haven't been able to pass on these costs. But like I said, if it does fall more, I will be looking to at least one of these players in the field, maybe even PayPal too. I could do a video on, just because I have been looking to get exposed into the fintech space, just because it is so hot, and I'm not really exposed to the financial sector really at all, because I don't really hold banks either. So it would be a good way to diversify for me personally. But those were really my thoughts on the stock, and that's all I wanted to say. If you guys made it this far into the video, thank you very much for watching, and have a great day.